actually pretty bad. It wasn't just me. It basically hit everybody here on the East Coast.
Yeah, it
Um,
definitely it hit us as well. Here in central Indiana, we're like, man, it's so hazy, but nothing like actually what I saw there in New York. But anyway, well, it's
yeah, it
hot everywhere. Hey,
was
we
pretty
are
ugly. Actually went out to the water, and it literally looked like a smog. You couldn't really see anything. It was the sun was like orange, just like weird. So I mean, I didn't even know how bad that fire was up there, but apparently it was pretty ridiculous. Uh,
I know. You
uh,
Canadians can chime in and let us know. But
I
yeah.
I can't believe you got it in Indiana. I mean, that's pretty far.
Oh yeah.
That's
Yeah. Yeah, but it
wow.
didn't do to our skies what it did there to New York City. I know I saw pictures, but we were just hazy. It was just hazy. So,
hit
and
everywhere, and even down in Washington D.C., Delaware, Philadelphia, that whole area. Uh, Even up in Toronto. I mean, not in Toronto, but more like a Buffalo, Syracuse. I mean,
yeah,
it was really bad. But
nuts.
uh,
All right. Well, let's clear the smoke and mirrors and get down to the nitty gritty in this market. How about we do that?
of
A lot.
course,
Yep, a lot going on. Those sectors, they're trying to rotate. We are right. Last time I looked, we were 2 points away on the S&P today, 2 points away from that high back in August of last year. It's taken us that long. And technically speaking, we are technically out of that bull market, if I understand things correctly. But what I put here on the screen, and anybody can take off that screen share anytime they want to as well. Actually, I guess I can too as well. But that credit card debt is going up again for everybody, 50-year-olds, 40-year-olds, 30-year-olds, 20-year-olds. You can just see that really, taking off. So I want to find out from you guys in this market that's very risky. We know there's risk in the market. And that's why we come here every week. We try to show traders how we're looking at the market and the tools that we use to keep us on the right side of the market. But we know that there's this risk. And so we try to protect that capital. And you all need to understand that too. Before you ever click that mouse, you want to know what you are trading. So let's get into this. Let's find out from you guys. Tell us, tell me, what do you think about June so far? And what are you expecting in the market price action next week, with the Fed coming out with their announcements, all that good stuff? Roger, why don't you go first?
Well, thank you, and thank you for having me on, Celeste. I think what's going to happen is, I think this AI driven rally is going to fizzle out, and it's going to take a lot of the stocks that are already struggling with it. As I mentioned, and I'll get deeper into my analysis, there's a lot of sectors that are temporarily overbought that were stretched out to the upside with the tech that are now going to be taken down as well. I mean, there was an article. I mean, I'll tell you guys this. This is a good way to summarize all of this. There was an article that came out in Fortune magazine by Stanley Druckenmiller. Stanley Druckenmiller is one of probably the top 2 traders in the world, in my opinion. And he said again, the Fed, it's very, very hard to come out of this with the Fed being as aggressive as they've been, come out without us going into a recession. And even if forget the word recession, let's talk about inflation. We're nowhere near the finality of this. What I think a lot of folks are doing is they're making a big mistake by thinking that the Fed's intent to pause is the beginning of the end. No, it's the beginning of them not knowing how bad it's going to be. And if you read their minutes, Powell didn't say that, but if you read their minutes, it was very clear that that's what they're doing. They're waiting and seeing. They said the other day, reducing rates is not even on the table. We don't even want to have that discussion till the end of 2024. I mean, so I think a lot of people are jumping prematurely. And what I'm seeing with AI is very similar to what I saw with internet in 1994 and chips in 1994, where where everybody's grandson, I remember everybody's grandson had a .com company. It was if you had a .com company, lenders were just giving money. Now it's the same thing with this AI. We're about 20 years away. It's like, talk to me when we have robots running around and doing things. Right now, it's a great move in the right direction, but it's just a move. People are getting way too excited for the level of development that this technology can do. I mean, talk to me when they can actually do stuff that we can't, without us. We're nowhere near there yet. So I think it's going to take a couple of more months, maybe a couple of more weeks for the rest of the world to catch up with that. And it's not going to be pretty when that happens, because this rally is concentrated in just a handful of stocks, and this is a big recipe for disaster. Yeah. I'm short a majority of my positions right now, cross board. I'm not long at all. Things are just not looking that great.
Yeah. Though, that's a lot of good information there, Roger, and insightful. I'm starting to see a lot more write-up about the Fed, some people having just some different motives maybe than what we're hearing a lot about. So it's kind of playing into what you're saying there as well. It'll be interesting for next week for sure. And definitely what you're saying, just a lot of overbought conditions based on a few stocks. It's going to be interesting, but we're going to be prepared. And that's part of why we're here today. Exactly. Hey, Scott, what are your thoughts on all of this?
I mean, Roger, I love Roger's AI idea. I think, it's so great we can type in ChatGPT and we can find recipes or whatever. But I just think it's so funny. I mean, we're not an iRobot yet. Will Smith isn't running around. But my thoughts are, again, similar to Roger's. I feel like use a stupid basketball reference, but I feel like we're early Michael Jordan teams back in the late 1980s, where Michael Jordan was scoring 40 a night and the Bulls are winning, right? But Michael Jordan turns an ankle. Are the Bulls any good? That's what the market feels like. It's like we have these 6 or 7 or 8 superstars. And I know the market's you cannot deny we are in a bull market. It's official, but man, doesn't feel like everything's up. It feels like a couple things are up. So, I mean, I feel so bearish. I'll take the bullish positions. I mean, if they're there with stop losses and so forth, but man, I'm so nervous about a turnaround, to be honest with you. It just doesn't seem like we're super bullish.
Yeah, very, very interesting. Yeah, Fausto, what are your thoughts on all this?
Well, listen, you mentioned earlier, I mean, the S&P has hit that major, ceiling right there. The Dow got pretty close. And you know what? A lot of the other stocks out there that we've been watching, and I'll show you a little bit more, a couple examples a little bit later on, on that Apple and everything else. But you know what? There are some stocks that are benefiting from it. I mean, Tesla's been an animal these last couple of days. Yesterday, I mean, I'll show you some examples, but these things are getting these big block orders. I mean, I agree with Roger saying, but I think there's also a big short squeeze going on out there. I'm seeing these big, 400,000 share orders, 300,000 share orders, like on these $200-$300 stocks, and they're getting filled. So I think a lot of people are probably agreeing they want to start getting out because they made these big runs. But there's always opportunities out there, though.
Yeah, exactly. Good. Let's start uncovering some of those opportunities. So, Scott, let's switch over to you. I was talking to you earlier. You got some really great ways at looking at the long term. You've got some, IPO opportunities, some stocks that you're looking at in the midst of all of this. Why don't you take over and share with us what you're seeing deep in the markets here?
Okay, let me get to my screen. Okay, and then we'll start from the beginning.
Perfect.
Slideshow from beginning. Should be loading up now. Is that okay?
Yep, we see it. It's great.
All right. Keep in mind, there's a couple things. First of all, I'm taking the long-term perspective. I mean, this is not just long-term. This is super long-term, right? This is just a different way to look at it. Do I like it? Yes. Do I trade many times shorter term than this? Yes. But sometimes perspective matters, and I'm trying to offer maybe something a little different. Does it work? I mean, I'll show you some things, but keep in mind, this is ultra long-term, and what ultra long-term will do is keep you out of what should I do now? I mean, everything, should I buy AI? It keeps you out of that craziness. So keep that in mind. I am going to show some numbers. Past performance not indicate future results. Okay. If I've been on before, I've talked about this. I'm going to keep this perspective because it's fascinating and it seems to work long-term. This idea of stocks go up and they go down, and you want to buy on the breakouts after they've fallen, or in the case of an IPO or a new stock, you want to buy when it's brand new, or you want to buy in this stage 2 where moving average is sloping up and everything's rising and everything's great, and you buy on pullbacks. Okay, so keep in mind, this is something that's famous. We've talked about it before. It's been around for decades. Okay. I'm talking even crazier. I mean, crazier. I went to monthly. I took that same thing and I put it on a monthly chart, which is ridiculous. but the same pattern on an even longer term, right? The one we showed before was weekly. This is monthly, and it goes up and down, and then it breaks out. I mean, it looks the same on a monthly chart, except it's a little less crazy rush to the screen, even though weekly is plenty slow. Monthly is even slower. But here's a chart of Apple way back in the .com, and you can see if you bought in stage 1 or stage 2, you made a couple dollars, and when it rolled over, you don't want to mess with it here, but then you want to get back involved. So I just gave that as an example. Here is good car company Tesla that was mentioned, right?
Yep.
Same thing. This is on a monthly chart, but you can see this Stan Weinstein up and down, right? So it does exist. It isn't just some crazy book from the past. But I will show one thing before I show that next screen, or I will talk about this. I changed it into 12, 2, and 12, and I talked about this last time. So here's what I mean by that. It's a 12-month simple moving average. I say it slowly, simple moving average, right? 12-month, nothing spectacular about that. It's just a year. But I don't want one close above. I want 2 closes above. As you know, I'm a quant. I like to make robots. I like to make software. AI. No AI. I like to have it close twice. Why? Because that proves it. One close above the line isn't proof enough. So this is a really slow getting in process. And then you get out when it closes below the 12-month simple moving average. So you would have seen, technically you would have entered here. You get out on a close below. It doesn't. I mean, this is a long time, right? We're talking years. And then it finally closes below and you would exit. Okay. If I put the software, I put the simple code, so simple, on Tesla, right? And it works. Obviously, I know cherry pick, but I'm not trying to cherry pick. I'm just trying to show you on what can happen on a stock that moves. But this would be the equity curve if you use code and you just traded it with a robot, which is just software. Okay. And this is the equity curve on a hypothetical $10,000 account. But just doing that, there's losers, right? It doesn't win every time. But a $10,000 account does that, right? Which is, I know if you bought and hold, you'd see crazy numbers like that too. I'm just trying to give you perspective, trying to simplify. There's no decision-making in something like this being this long-term. And it obviously makes ridiculous, crazy numbers. Whether you had 160,000 of hypothetical, 69,000, yes, 169,000, 839 in profit, hypothetical, and only a $4,200 drawdown, close to close. It's ridiculous, right? But I'm just showing you, I didn't make that up. But I put this on the SPX going back to 1960, exact same thing, monthly chart. You can see the equity curve. So this is not just a flash in the pan, which is what I like. I like repeatable stuff. I like stuff that'll work hopefully tomorrow and beyond. And the SPX has been slowly climbing. So it does have a history of just looking at this long-term perspective, right? So now, offer one more perspective. John Boyk has some great books. One of them is How Legendary Traders Made Millions. How Legendary Traders Made Millions, said it twice, if you want to check it out. And he goes back to the early 1900s to 2006, and every great trader from Livermore to William O'Neill and everyone in between. And the conclusion he makes after studying decades of the biggest stock market winners ever are that the ones that run the most are the ones that are new in the last 8 years. That was his 8 years. Now, some people say, well, maybe 2 to 3 years was when IPOs go cuckoo. So now that we're officially in a bull market, how do we find like IPOs, i.e. stocks that have just started trading? So I put this long-term system on it, right? And here are just a few examples, and then I can send it back to you. I think IPOs are so opaque from when I started trading back in the early 2000s. Like, what's an IPO? How do I get involved? It went up 100% a day. Oh, it's down 90%. It was very hard to access for me and to take good trades. But here's one way. You can see on this chart, magically, it's a monthly chart on one very famous IPO, PANW, Palo Alto. And here, all of a sudden, right, it'll be trading for a long, look at how many months it'll trade. And then all of a sudden, the moving average just pops up, right? Because it needs data to print. So simple. Once this average shows up on a new issue, you can start saying, hey, maybe I want to trade. And you can see on the screen, all I did was then use the rules, 1 close, 2 close, and then open it, get in at the open of the next month. And holy moly, look at that, right? All you have to do is find a newer stock that's hot, maybe an AI stock, right? Wait for the moving average just to show up wait for 2 crosses and then get in and then get out, right? One close below. Look at Apple. Nice little computer company way back in the 80s. Oh, magic moving average just shows up, 2 closes, and then you get a big run, right? Now, we won't talk about it today, but you don't have to wait for it to close here. You could take it out up here. Feel free to make money if you want. This is what happened to Apple though, right? There's the new IPO, and then Apple has continued to do well. You should look up that company. It's a pretty good one. Here's Schwab, was a famous IPO in John Boyd's book and others. Just going along, the moving average magically shows up on the screen. You wait for 2 closes above, you get this one, which is almost a double. And then you wait for the next one and it starts going real big, right? Home Depot.
Wow.
People forget how big Home Depot was. It was massive in the 80s. This is it. You can't even see it, but the moving average shows up and then you could have gotten in there with 2 closes above. But what I wanted to show is that if you missed the first IPO, if it's a good one, this lasts for decades. Look at these runs if you just kept following the system after the IPO, which is why I think Boyd says that it takes about 8 years. You can still get in on these hot things, right?
That's cool.
Here's Amazon. Magic moving average shows up. You could get in on a breakout or 2 closes above. And then the next one after the dot-com crash went up 200%. And here's Tesla. Moving average magically shows up. Oh, there's a loser. Doesn't work every time, but it does get the next one, which was kind of massively incredible. Last one, here's NEO, a Tesla clone, right? Chinese. Moving average shows up. Oh, tiny loser. And then NEO goes from $4 to 37. So it's just an interesting way to think long-term about these new issue stocks. And if we are in a bull market and there are some hot stocks breaking out, maybe we could consider, right?
That is really cool. Do you know any of those hot stocks about ready to pop out?
I have a couple, but maybe we'll talk about that later.
Yeah. Are we going to talk about that in Ask the Pros Premium, maybe?
Yes, you read my mind.
Yeah. I just want to say right now too, and a lot of people are typing in that, yeah, as I was talking about before we started Ask the Pros today at 12 o'clock, I was telling you about the Ask the Pros Premium, and there still is time for you to get into Ask the Pros Premium and find out exactly what Scott is looking at, seeing some of these things. So we'll get that typed into the chat there again. It's there. Adam has just posted the link there. It's very easy to get involved with Ask the Pros Premium. And that's the kind of really incredible content that you get in Ask the Pros Premium. Those small stocks that someday turn into very big stocks. And we see some movement in those small caps now. So we see some movement in some other stocks. So let's find out. So worth it. Love it. Thanks for that, Jennifer. I agree. So thank you, Scott, for sharing all that. Fantastic. Do you have anything else? I didn't mean to cut you off.
I'm done. No, I'm ready. I'm going to keep my mouth shut and let the experts take over.
Yeah, you are hardly done. You just getting warmed up for a 105.
That's right. That's right.
Yeah, I can't wait. Can't wait. All right. Well, let's keep this going. Let's find out a little bit more about what's going on in the belly of this market. Let's talk to resident Uncle Roger Scott, who has all of that insight. So Roger, not Scott, but this is Scott. Roger Scott, why don't you go ahead and take over and tell us what you're seeing, in the broad markets, the sectors kind of trying to rotate, the pressure, and some other person named Kathy Woods. I don't know.
A lot of stuff going on. Celeste. So first of all, I want everybody to take a look at the Dow Jones. You will see that the Dow Jones, regardless of how it's looking right now, up, down, flat, you will see that it's been in a very, very big trading range. It hasn't really done much. Now, over time, historically, not right now with this AI fiasco that's happening right now, but generally speaking, the indexes, most of the indexes will follow the Dow Jones. That's just very, very simple rule going back the last 100 years. That's why we still use the Dow. Now, the problem here is this. If you take the equal weighted QQQ, it's going to start looking a lot more like the Dow than you think. I'll show you. It looks like it broke out a little bit. Algos had their little fun in the sun right here, but this thing's going to come right back into this channel. And my prediction is that a lot of this stuff is going to look like the Dow. For example, let me give you a good analogy here. Look at, and remember, my thesis is that my theory and my thesis is that the Dow is going to control how the market's going to look. And what we're seeing in the Dow is very much like what we've been seeing with Kathy Woods, which I'll talk about more in a minute too. She's been in a very consolidated channel now for an extended period of time. And as I keep reminding everybody this, people don't listen, but I'll remind you again, she peaked out a year before the rest of the market did. I call these the degenerate stocks. The degenerate stocks are always going to be the first ones to go down, and they're going to be the first ones to get us out of this. So from where I'm seeing right now, we're in a very, very choppy market. Volatility is declining. And let me show you another one. XLI, industrial sector, for example. Look at the industrial sector. Does it remind you of something we were just looking at a minute ago? This is the industrial sector. This is the Dow Jones. They look virtually identical, But here's the problem. The problem is once we go inside, there's a big, big red flag here in the short term. If you look at industrial stocks right now, which are right here, there's a problem. The problem is, and I said this morning before the open, and it's just now escalating. The problem is we peaked out. Our momentum levels peaked out. So if the industrial stocks look exactly like the Dow stocks, and if industrial stocks are peaking out, and if there's a correlation of about 97% between the S&P and the Dow over time, what does that tell you for the rest of the market? But it's not just the industrial stocks. It's also the real estate stocks. And this is the short-term momentum levels. This is like the next couple of weeks. Peaked out, started to come down already. How about basic materials? Look where basic materials are headed. In a nutshell, coming down. They peaked out and they're coming down. In a nutshell, the only two sectors that are still gaining some degree of momentum or have started to is consumer staples and the healthcare, and both are non-inflationary sensitive sectors, which means they can perform really, really well even if economy falters. Now, next week we have the Fed meeting. It's going to happen on Wednesday and Thursday, I think 13th and 14th. You can correct me if I'm wrong, but I don't think I am. But the Fed is going to take no action. When the Fed takes no action, a lot of people are going to, it's one of those buy the rumor, sell the fact kind of scenarios where tech is moving up in anticipation of the fact that Fed is not going to be raising rates, that they may be lowering rates. I'm here to tell you, the Fed is not going to be lowering any rates. The last thing the Fed is going to be doing is lowering rates. Matter of fact, they've said in the minutes last minute of the FOMC meeting, they are not going to lower rates. That's not even on the table till the end of next year, which means this is just a simple pause and wait to see if economy is okay, bad, or horrible. That's what this is. Notice none of those choices is the economy good? It's not good. Now, here's a big problem. Here's a big problem. Jobless claims. Jobless claims report came out on Thursday. Now, let me show you something important here. This has been one of the pillars of the Fed. Jobless claims are jobless market is very strong. So therefore we're going to continue raising rates. This is one of the biggest reasons why they're not raising rates right now, because the job market is falling apart. And if the job market is falling apart, that's a big, big problem. Now, why do I say this so seriously? This number was around 200,000 for about a year. Now, what did I say about 3 weeks on this show? One of the last things to fall before we go into a recession is the job market. The job market usually is the last thing to give up. It's not the first thing to give up. It's the last thing to give up before we go into a worse condition. So looking at this, looking at the sectors, looking what Stanley Druckenmiller is saying, things are not looking nearly as pretty as a lot of people who are looking at the QQQs are thinking they are. They're not looking remotely as good. And I'll tell you guys, I'm not one of those conspiracy theory bearish guys. I'm a fairly bullish guy. I mean, I like to trade both sides, but I'm a bull. And this is not representative of the market right now at all. This is representative of less than 10 stocks. Momentum levels are not that great. So in my opinion, you need to be very careful right now, and you need to watch selling pressure on, besides consumer discretionary. Basically, I think we're going to see selling pressure on the industrial sector. This thing looks like it's a little overdone right now to the upside. I think where is the basic materials? I think basic materials is going to be coming down a little bit. And I obviously think information technology is really, really overdone. Matter of fact, funny enough, infotech is still appearing to be strong. But if you look at momentum levels, they've already started declining. So there's a major divergence right now. Less stocks are even causing tech to go up now than before. So it doesn't look pretty at all. So that's one of the first things. So my opinion is that the broad market is a little overbought right now. The Dow is in a very choppy state, as you could see right here. And we're going to continue seeing this type of market until our best friend Kathy, which I'll talk about in a minute, starts breaking out of this. I drew this, by the way, almost a year ago when I told folks that the market is not going to go down anymore. I haven't changed this picture since then on the show. It was June of last year, and or May of last year. And now I'm going to extend it. And I'm going to tell you guys again, nothing good's going to happen with the U.S. stock market till the degenerate index is going to break out of this channel. And once it does, it's going to break out nicely. But the fact that it's moving sideways for so long is telling us that probably the U.S. stock market's not going to fall on its face. It's probably going to consolidate, stick near the current level, maybe go down a couple of thousand points to the lows, test it out, and then go from there. Now, interesting thing. Speaking of Kathy did the impossible. Again, first thing she did was, I don't know if you guys know this or not, but according to my assistant, and I checked, he's right. She sold NVIDIA before NVIDIA started this ascend. Yes, she did. Yes, she did. But that's not why I'm actually here to talk to you about her. She did another double whammy. She bought more Coinbase after the SEC filed the lawsuit.
Oh.
So she decided to buy this thing, and it went down again. So Coinbase was sued by SEC, and ARK Fund scooped up 329,000 shares on that news, making it the 5th largest holder.
Wow.
And this happened June 7th. This happened 2 days ago.
Wow.
So she just doesn't know how to she's just amazing. You got to watch her. She collects the most degenerate stocks. Those are the stocks that momentum players may think they become stock market geniuses because they just go up when the market is ultra bullish like it did in 2020. She collects those stocks. Stocks that have no value, and once they fall, they really fall. But that's what Kathy's all about. So that's the second thing I wanted to talk to you guys about. The third thing I wanted to talk about is regional bank stocks. Now, we are short right now in the VIP room, regional bank stocks. And regional bank stocks, I think we're going to have another leg down. Stanley Druckenmiller, which I listened to very, very closely, he said, he actually used examples. He said, there's a lot of stuff under the hood when you go from this kind of environment, the biggest, broadest asset bubble ever, and then you jack interest rates up 500 basis points in a year. I think the probability is that Silicon Valley Bank, Bed Bath & Beyond, they're probably the tip of the iceberg. Well, regional banks, there's like 30 regional banks. I'm willing to bet you money that one of them in the next 2-3 weeks is going to have some bad news. When that happens, just one, when that happens, the regional banks are going to go down again. You got to think like a trader. You got to use the odds in your favor. Now listen to this. This is straight from Janet Yellen this week. Treasury Secretary said U.S. banks could be pressured by the weakening commercial real estate market, which is really getting bad. and are likely preparing for difficulties ahead. She says, I do think there'll be issues with respect to commercial real estate. Demand for office space, since we've seen such a big change in attitude towards remote work, has changed, especially in an environment of higher interest rates. However, she says, banks should be able to handle the pressure despite near-term pain. I think banks are broadly preparing for some restructuring and difficulties ahead. She said, banking supervisors are monitoring lending to ensure they are prepared for fallouts. She also said smaller banks, regional banks, could consolidate amid earnings pressures. We're going to start getting, I think this is going to come down first to the 40, then break 40, come down to the 35. My suggestion in this case would be going to the puts that are expiring in about 28 days. If it doesn't do anything in the next 2 weeks, get out of the trade and buy the 40, 350, 40, 43 puts. You can get them. If you want a little more liquidity, just go to the 21st of next month. Don't hold this for more than 3 weeks. And then you got plenty of liquidity here. Go for the 43s. You could do them at $2, and you could do a spread and offset the 43 with a 38 and get about a quarter of your money back. So there's that. Now let's continue. So in light of that, be very, very careful. And I want to now go through seasonality for next week to give you guys things to avoid and things to trade and so forth and so forth. Let me just reduce this. Here we go. Got my cat pictures here and all that. But anyway, you could see here, this is the S&P 500 next week. This is the Dow Jones, the yellow, and then it turns light lime green. This is the Dow. So you could see next week is not an amazing week, but it looks like things are okay. But there's a lot of sectors that are starting off flat and moving lower, like basic material doesn't end well. Utilities doesn't have a bad first part of the week. Healthcare sector does pretty well. Technology seems to do okay. Communication sector begins the week on a high note and then kind of falls apart. This one here, which I can't see my monitor, XLE Energy does not do well next week. It does not do. And by the way, the fact that they cut production, OPEC cut production, and it fell on its face afterwards was very, 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 very negative and telling for this. Financials fall apart next week. Real estate falls apart next week. Basically, the week, it kind of starts out like this and then it just kind of comes back around. So slightly bullish bias, but nothing really standing out except for technology that really looks like it's peaking on Wednesday of next week. But take that with a grain of salt because you're not seeing the same type of chart on XLC and you're not seeing the same type of chart. The fact that XLC and XLY, which highly mimic XLK, are looking very similar, I would venture to say that the first 2-3 days of next week will be okay for tech, and then they're going to fall apart pretty bad. So I'm not really. You guys can see my screen, right?
Yes. Oh yeah, looks great. Healthcare is looking good.
Okay, good. Yeah. Like where's the healthcare here?
Down at the bottom.
Yeah,
left.
healthcare looks good. Tech looks okay, but really
Everything else.
Nothing fantastic. Nothing fantastic. And also keep in mind, don't let the up or down sway you. As always look at the percentages because, like in tech, 0.7 is pretty reasonable, but like something like this where it's like negative 0.1%, that's just flat.
Mm-hmm.
So again, you got to take this with a grain of salt, but at least this gives you a really good idea of what actual seasonality is over like 20, 30 years on every sector next week. That's all I've got for you, Celeste.
Excellent. That's great. There's a lot of good content. Thank you, Roger, for sharing all that. Thanks. We've gotten a lot of good stuff so far today. Aren't you all glad you're here? We're going to keep it going. Fausto, I want to hear more about these opportunities that you were talking about. You were down in Florida with T-Buzz and Jeff Smith and all the gang and some things that you were seeing there. And then also, this is very important, how we can protect our capital, from these false breakouts that you're going to talk about and avoiding these traps. So let's get right into it. Thanks, Fausto.
Yeah, Roger's like, telling you all these big things, and the whole idea to understand it, there's always opportunities there to make money. I don't know if anyone here is in real estate, but everyone's like freaking out. Is it too late to get into real estate? Is it too late? You see what happened in Florida, how the housing market, and then there are people out here that like, oh, the buildings are empty and stuff like that. And I know a lot of people in real estate, and I would like to get into real estate. And I'm like, I don't know, but you know what they said? There's always deals. There's always a deal out there to get out there, no matter how bad the market is. And this is what separates traders and to investors. Traders are always looking for good opportunities. We're always buyers. Listen, cash is king, and that's all that matters. And I'm going to show you a couple of great opportunities because regardless if it's going to get worse or it's going to be flat, every day there's something moving, no matter what. There are over 25,000 stocks out there. I could almost guarantee I'm going to be trading probably the top 5 or 10 that are moving every day. And there are a couple of them. Like right now, I'll bring one up. As we were talking, Celeste, there was a stock Blue Apron. Does anybody know Blue Apron, by the way?
Not me.
I mean, I haven't traded Blue Apron in years, okay? But anyway, they just came out with news while we were talking. When we started, you could see here around 12 o'clock started, stock went from $5, okay, all the way up to $9.50 in less than 15 minutes. So, I mean, you do the math, that's almost, I mean, it's up 63%, on the day. These are things that day traders like myself look for. Now, what I'm going to show you is how to find them, why it went up, why did it stop there, and how these things get halted and all that good stuff, because that is just only one of several of them out there that I want to talk about. So let me just change the slide here and show you what we're talking about. First of all, just let you know, this is strictly educational. I'm not making any guarantees or promises at all. It all depends on what kind of trader you are. Just please be very smart and be very before you make your first trades out there. Now, basically what I'm going to do is I want to invite everyone to see this live after this week. What I'm going to show you in the next 30 minutes, I don't know if anyone here has ever seen it before, but you're going to be quite overwhelmed in a way of how simple trading is. The hardest thing to teach more is like the discipline, the psychology part of it, the greed, people get in trouble. But I'll show you everything that we're doing live in the market, and I'll go around and I'll show you a couple of live trades. And I'll be happy to hear if anyone has anything you want me to point out. I'll show you exactly how we look at it as a day trader. Now, how do I know this? I've been doing this for 30 years. I mean, some of you have seen me many years. I know T-Buzz for almost 25 years. Been down there so many times. But listen, sometimes it takes time to hear it over and over again before it kind of sinks in. And now, for some of you here, I don't know if you saw what happened with Carvana. Did anybody here trade Carvana, by the way? Did anyone see what happened with Carvana? I mean, I would never even think of I hate that company. I hear people, they got screwed by them. Yeah, okay. The stock was $350. Okay. The thing ran down to $6. It's been on a big run. This is just yesterday. This stock went from 16, went to $26, up $10. Who cares if you are not a Carvana fan or whatever it is, or you're anti-car, a plus car, I don't know what it is. But, just kind of show you what happens in making, $900 in 15 minutes. This thing just had a huge pop. Now, oh, you traded it, Mary? There we go. We got a couple of people here traded. And you know what? Not only that, but you could also trade the options. You could day trade the options on these stocks too. But they're not just Carvana. There was Big that went from 6 to 8. There was NVIS. I mean, look at these things. I kind of like to focus my attention to some more inexpensive stocks because when you're about, and it does work to more brand name stocks. But what I kind of focus on, I kind of see is that less risk, more reward. And you know what? It's all about managing your capital. I don't care what these companies do. I don't care why Blue Apron is up big. I don't care why NVIS is up. You know what? If it's got a good trend and there are buyers and sellers out there pushing it up, and I see the support resistance, that's all that matters, because as a day trader, we're always in cash and cash is always king. Now, there's a couple of ones, GLP. I mean, I can go on and on and on and show you. So the thing we have to look at is before we understand how things start, you got to know how to read the future. And that's what I do. So what is Cybertrade University style? And by the way, this is what I was trained being a market maker on Wall Street. We just follow the money. That's it. It doesn't matter what you and I think. It matters what Wall Street thinks. I used to trade on internet machines. I used to trade on platforms. Right now, I'm going to show you could buy for $15. I used to pay thousands. Now try to get a 22-year-old kid to come up with $1,000 a month to get some of these platforms is unheard of. But now they came down so much, you had to get licensed. You don't have to do that stuff. So all of us can go out there, and I'm going to show you a little bit of these strategies, what they do. Okay. So now, how to follow the big money. There are 4 ways of getting data. There's level 1, level 2, level 3, and level 4. I'm going to focus my attention because of the short time we have on something called level 4. Now, basically, a lot of these platforms are all offered to you. You can get it. Brokerage firms offer it. Some of them offer for free to you. I preferably don't like free stuff because obviously there's got to be a catch. Nobody works for free. But level 2 has been outdated since the late 90s. Level 3 is a very, I don't know if somebody ever watched me. I'm on NASDAQ. I'll be on next week, actually. NASDAQ actually has me as their expert to teach you how to trade on the exchange. And that's the one in the middle. But I want to focus my attention something on level 4, which, and by the way, does anyone here have any of these things, level 2, 3, level 4? I'm just curious. There's over, a few hundred people in here. Anyone here using these systems? Cypress, you're not using it. Okay, good. That's good. So you're going to see a lot of what you could have seen in the future. Now you're going to be able to get it, and it's going to really kind of really knock your socks off. So what we're looking at right here is, and let me get my crayons and point this out here to you so I can draw this up. So right here, this is called level 3. Okay, what's in this column right here. Okay, so what you're seeing is every single order out there of who wants to trade this stock that we're looking at. So, and not only that, think about this for a second. You are seeing 190,000 shares out there looking to be sold at $5. And you're looking down here, you got 40,000 share buyer, 100,000 share buyer at $3.90 and $4. So you are seeing every single order out there. Now let's think about it. You have everyone here learns the basic of charting, support and resistance. Well, let me explain something to you. Support and resistance does not exist unless those same buyers that made in the past are in the future. So let's be clear on that. You might go out there and look for those support resistance levels and like, oh, we're coming to a resistance level. Okay, great. Did you ever see a stock break resistance levels? How is that possible? You ever see a stock break a support level? They're like, that's not what Mr. Fibonacci said so. Okay, when I crossed to my MACD, because those same buyers were out there, were not there in the future. And this is what we're focusing on. We're focusing on the future. Now, this is how Wall Street traders. So if you want to know how we get algorithms, dark pools, high frequency trades, this is what it's at. This is what we actually do here. Now, let me just change the slide and show you what we got here. So we're looking at a stock called S. S was a stock that was moving, had a really nice move, went up from about 1380 and went all the way up to about this price of 15. Now you'll notice that when it got to 15 on this chart on the left, it started having a tough time going past it. And you're probably wondering, why did it stop? What made it stop? I mean, everybody said on TV it was going higher. Analysts are giving it, buy recommendations. Why did it stop? Well, there's only one reason why. You'll notice right after about 9:30, some seller decided to show up at $15 for about 43,000, 46,000, and 12,000. Now, is that a lot? Well, listen. There are sellers at 1,300, 4,000, which looks like more the average at every price. But when we got close to that 15, that's when those sellers starting to show up. And when we implement level 4 to it on a heat map, you can not only see him out there, but you could see if he's getting executed and you could see if he added to his position. Hey, any of you here ever average down or average up? You ever say, I like this stock. I want to buy more of it. You think you're the only one out there doing it? There's people, you are looking at every single order out in the entire world out there that's doing it. Yeah, and so not only are you doing it, but someone else is doing it. So why not try not to, not be a leader, but it's okay to be a follower, I tell everybody. Here's an example. And not only that, but it got close to that 15. And not only that, but it got there so fast. But now after the next 10, 15 minutes, it hit it, it never wanted to break it, okay? So now you know how these stocks build what they call these flags. We call them Fausto flags, actually. It's really consolidation that's happening. But you see exactly how they're actually, how they come to fruition. Because these people are preventing it from going higher, because these orders are out there that you're not viewing. Now, let's move on and see what happened here. Now you can see how the stock went up there and hit it. Now, you could see that maybe someone ended up buying it, which kind of looks like what it did, or it kind of broke out. Now, here's another example. Here's a stock with a 232,000 share buyer. This is a pretty cool one. I think you're going to like this one. So this buyer shows up right around a little bit after 10:13. Okay. And the stock is hovering about $82. Now let's think about this second. 1,000 shares, 9,000, 3,000, 234,000. Who the hell would want to buy 233,000 shares of stock, right? But someone did. He's out there. And you'll notice the stock starts ticking up. So it goes from 1820, now it's at 1880. That's a pretty substantial move on 1,000 shares. But what makes this even better is when I change the slide. The buyer pulls his order. And you look down here at the bottom, this is called a volume bar. That tells you exactly that that was a lot of shares that just got executed at that moment of time. You know what he did? He canceled his order and he said, screw it. I'm just buying the damn thing because no one's selling to me at 1780. Yeah. So he actually apparently went out there at 1880 and bought it. And that's what made the stock go from 1880 to 1940. And guess what? It went past that. It went all the way to $20. Look at the volume, because remember, he had a lot of shares to buy. He put a limit order out there to buy it. We all know what limit orders are, meaning there's a price that you want to buy it. He said, screw it. I'm going out market. He went out to the street. He says, I'm buying it, whatever it takes. And if you want to know how these stocks got run up, there's your answer. Okay. That seller went out there, he executed. Now, how do I know that? Yeah, or listen, just from experience, but two, just by seeing that order canceling and that order volume bar start picking up. And you can even see here on a little bit longer picture of it, there was another seller out here that was at 20. And guess what? You see that little green ball? He even got executed. So it looks like he maybe even had more shares. And that's what drives these stocks up. Here's another example. Carvana, stock was coming down. Here's at 18, 34,000 shares, wondering why someone's like, oh, maybe I don't want to sell it. They want to buy it because this buyer showed up. And when you're thinking things go down, I'm like, well, why did they go up all of a sudden? Well, do you know these big buyers showed up? And the thing is, you can't see this on level 2. You can't see this on, other platforms unless you have, the right tools. Here's another pretty cool example. Okay, here's another big buyer comes in here. Stock, you see these green balls. That's a big block order just got executed. Stock's trading at 1980. You're starting to see all these orders starting to show up. Now, all of a sudden, this buyer shows up for 140,000 shares at $20.30. All right. See how those orders kept coming up? That stock literally ran from 1230 up to 1296. Not only did it do that, but that same stock with that order we looked at right there, it just ran from 2040 up to 23 in a matter of, what is that, 30 minutes? Okay. So a couple of questions coming across here. Fausta, can these orders be viewed on Book Viewer? Yes, they can. That's what COB means. That means current order book. But what's nice about other platforms out there, when you're looking at the NASDAQ, you're only looking at one exchange, even though the NASDAQ does make probably about 50% of the total volume. There are other exchanges out there. There's New York Stock Exchange, the CBOE. There are other ECNs out there. We'll cover that in that week program that I'm going to give you guys. But I just want to kind of show you how orders of the future and what drive these things go up. This is another pretty cool one. This was NVAX we traded the other day. So here you're looking at NVAX, right? And you're like, okay, wow, the stock looks pretty cool. It's going up. It's at $7.50. The stock's at $9. And by the way, this is all pre-market. Didn't even open up yet. And then all of a sudden, 9:30 opens up. You could see it right here. And boom, thing goes from $9 to almost $10. Now, you're probably asking, do I take a profit? Where's the resistance? I heard NVAX. I heard bad things about it. Took a big hit. Who cares? Okay. Because the thing is, as long as there are buyers out there, that's what's going to drive the stock. Your thing is this. This is the biggest issue why people lose money in the market. They don't know how to take a loss, and they don't know when they say enough is enough. So now we're looking at NVAX. You'll start seeing that right around 9:30, all of a sudden program trading kicked in. What is program trading? Program trading, all these algorithms, these people have these electronic orders that automatically will start selling for them. If it, like, for example, you have some of you know what I'm talking about. You do it all the time. You might have an order out there to say, hey, if this stock gets to this price, sell my order. Okay. You're the only one out there that does that. Every market maker does that. Every computer does that. Every exchange does that. Every, institution does that. Now, all of a sudden, right around that time, these people want to have their orders already to be sold. And you could see how this big order showed up right around $10 at 89,000 shares. Now, the thing is this is the reason why the stock kind of hovered there. But look what happened. It broke past $10. Why do you think it went past $10 when there was such a big seller? Oh, I know. Maybe that seller got executed. Okay. Because that could happen. Someone like, once again, biggest boom market in Florida, right? If you told me 2 years ago, I'm like, those houses are way, way overpriced. And I know a lot of you, some of you live in Florida. Yeah, go buy it now after 2 years later. And that same house probably is up about 50%. Listen, you might think it might be too much, but not for somebody else. It's the same thing with the stock. If those sellers keep buying it and you see those orders, that stock is what driven up. And not only went up past 10, there was another seller at 10.20. He got executed, went to 10.50. Now it's testing a little bit of a smaller seller. He got executed. The damn thing ran to $11. Okay. And you could see it because that seller kept getting executed. This is what's called a breakout. When you want to know how these stocks break out, well, when you got a big block order out there and that seller is getting done, there's only one thing I could tell you. That means somebody really wants to buy this stock. And it also could lead to something else. So you ever heard of a short squeeze? Somebody might be getting squeezed. You know what I mean? They probably shorted it and they're like, oh, shoot, I got to buy it back. So he's doubling and tripling down as the stock is going up. And that's what leads into that. I want to talk about Apple. Now, I don't know if anyone here was with me on Monday down in Sawgrass. I don't know if you did the webcast or you were on site. This one was awesome. Okay. And Jeffrey, that was on last week with us. He was sitting there right in the front row and he's like, Fausto, this is the most amazing thing. It just makes perfect sense. And you all know, Jeff's an engineer and he knew right away exactly what was going on. So he's looking at this and we're looking at Apple. Apple's been having a really good run lately. Okay. Back in the beginning of this year, it was at 120. The things are already up, went to 185. Now, if you notice right up here, this was actual Monday. It hit a high of 185. Now, and there's that actual resistance. That was actually on Monday. You could see how it had a really nice run in the morning. It ran from like 182. And then when I came on right around here, I was on around like 2:30, I think it was, at the DTI event. Right there, you could see how it hit 185 and the thing just tanked. And people are like, holy crap, how did that even happen, Fausto? Well, let me tell you what happened. Right here at 185, there was a 352,000 share seller out there. Actually, I'm sorry, it was 440,000 share seller out there. So do you know how much money that is? Think about it.
That's a lot of money.
That's a lot of money, right? Right, Scott? I mean, that's not pocket change. Who's out there, dishing out 400,000 shares of $180 stock when everyone else is only buying how many shares you people are buying? A couple of hundred, maybe? You know what I mean? So, but let me just tell you, that's just not one order. That was probably about 2,000 or 3,000 orders that made up for it. Because there are other people out there that might say, how do I know that, it's a fake order? First of all, a spoofing you heard of. First of all, it's illegal. I don't think anyone's going to be stupid enough to do that because you'll get fined. That's number one. Number two, it's a lot of people out there doing it. I don't know, maybe it's a mental number that people had out there, but it hit that number and it came right back down. So, and regarding about today, I'm just going to show you a couple other stocks that moved today.
Well, it's also, if I can just ask you too, so you were saying that you were there in Sawgrass with all those people and you were seeing that because you know how to read that and how powerful that is. Like if you had a position on an Apple or you were swing trading Apple, how beneficial that would have been to have that information, right? That's what I'm seeing. And
that's a good question because one of the persons was asking in the room, and can you swing trade on this? Absolutely, you can. You can, because you can look and go on what's in the future. And I'll show you some stocks that actually you might be doing a swing trade and might say, you know what, let's see what's happening with that stock. Let me just bring up something right here. Hold on. Because there were a couple of stocks that moved this morning that I thought were pretty cool. I want to talk about Tesla. I want to talk about Peloton. They were all moving really, really nice today. Let me just bring something up really quick. So I'm just curious to see if the seller's still out there on Apple, because he's been out there for the past week. Oh yeah, actually he's out there. He's out there now. Look, see, he's still out there. This is actually right now. Wow. See 185?
Yeah.
337,000. He's still out there. He's still out there. Okay. So when you're out there trying to figure out, can I swing trade this? Of course you could. By the way, just to let you know, I don't see any buyers out here. Look at the price right now. The stock's trading right here at 181. There's no buyers. Okay, there is no, but there's that seller out there. He's still out there. So if you want to have that game plan, I bet if you went on options and you look at some option calls or whatever, you'd be shocked what you'll see and what you'll learn on where these things expire too, because it's all relative.
I
All right?
love the way this looks, Fausto. And it's like, having the tool is one thing, but what I'm hearing from you as you're going through this is the amazing amount of knowledge that you have to work with this and see these things. And if Jeff Smith's saying that, then I know that's hugely valuable.
Well, it's something that we all could use. I mean, like, listen, everyone has a really cool style, here that we use. We all have our own. Listen, a lot of educators are actually my students. I mean, I was doing an event yesterday, and the presenter before me was one of my students 10 years ago. Eventually you find a style that might work for you, but it really all starts with this. I mean, even with Tom and Tom, I was with him. Just one of you just mentioned, Ray. Yeah, you can get this right on Thinkorswim. I actually have a great video on YouTube. I think it's one of the most popular videos that we have, and Thinkorswim offers how to actually implement that level 4 on the Thinkorswim. So like what's the worst that could happen? It's not going to hurt you to see where those orders are. If you got something that works for you, great, just implement this, But the Apple trade was great. But here's like a couple of stocks just to show you, like Tesla. Tesla was an actual really a good one too. Let me show you here on level 4 on what we have here. So you could see here on Tesla, you had 167,000 shares sold. These orders started showing up right around here, around 255. And you could see it that they canceled their order because obviously they're not going to get executed. So they lowered their offer and they lowered their offer. And then this poor fellow here, 145, he got executed, which is obviously not too well for him. But you see how the stock is channeling in these lines. Those lines are not indicators. Those lines are orders, okay? And you could see them on the right-hand side. Peloton, same thing. This one was pretty cool. Peloton had a really good run this morning, Celeste. You could see it ran from like $8.50 and it ran all the way to about $10 in a matter of, 15 minutes. Really nice move. It tested this seller out here for $10, but then this buyer showed up, this poor fella here, right around here, around $8.60, and he got executed. That was a lot. That was over that was about 250,000. And then you're wondering why the stock is holding here, and it starts to what's called a channel effect. That's what you're having right there.
That's
so
beautiful.
It's all about. And SoFi was another one. SoFi was another big runner. You can see this 570,000. Where do you see that? Where do you see 500,000 share sellers out there? And you see how the stock just went all the way up to that price of $9 and wondering why. You're losing money and like, I don't understand, why is the stock down $1? It had such a good run. It had good news. I don't know, because maybe there are 570,000 share sellers out there. So that's the beauty about trading when it comes to it. Now I know we're running out of time because I get so excited doing these things. I mean, it's crazy how fast you see how these things happen, but I want to invite everyone to come and see it. I want you to see it for a week. I want you to meet the traders and see how they think for themselves and how they know how to trade stocks like AI and how they went up and how we have a game plan, because it's really not about just knowing how to trade. You really got to trade with a team too. And you always want to trade with a good team, when it comes down to it. So basically what I want to do is I want to invite all of you guys to come down. You'll see why we've been endorsed by every brokerage firm in the industry. Been doing this for over 30 years. And like I said, we have a 5-star rating on Google. But I want you to see what's coming in the trading room. And all you have to do is just take your phone. If you have it, turn on you could type in that web address, or you could take your phone, just scan that QR code right there. And you can get into the room. Now, this is what you're going to get. You're going to have 1 week trial in there. You're going to get 3 pro workshops. I'll even show you guys how to set up that platform, because some of these platforms, they kind of, overwhelm me with you. And, you need to know how to set them up properly. And it's not really that complicated. Just that a lot of these brokerage firms, they like to sell you everything, but they don't realize that 80% of it's all window dressing. But we're live every morning. We're live in the afternoon. We're live all day for 1 week. You'll get the workshops, Traders Talk Library. And not only that, but as a bonus, if you do register, okay, I will personally give you a free coaching class. Okay. Now, what is it going to cost? Everyone's going to ask. Listen, name your price. Okay. I don't care what you want to pay as long as it's not zero. Right. The reason why is I think everyone should have a little skin in the game. Okay. If you think I'm worth $1, pay me $1. You think I'm worth 1,000, pay me 1,000. You think I'm worth $10, whatever it is. But I'm looking for serious traders. Okay. This kind of separates, the people that are just looking around, browsers, and serious traders. And you know what? After a week, if you feel I wasted your time, I'll give you whatever money you spent. I'll give you $1 back, your $100, that, whatever it is. But just name whatever your price you think it's worth it, and that's the link right there. But and that's it. That's all I got, Celeste.
Oh, that's a lot. That's a lot. Excellent. So yeah, go right there. The link is in the chat. I would just click that and go get that.
Follow the link.
Yeah, I participated in this class that Fausto was talking about with Fausto. Boy, it is so eye-opening. Just like you were saying that Jeff was saying, it's fabulous. And I'm a swing trader and an investor, and I love this. So it's that I'm telling you, Fausto, that intraday, that time frame intraday to me is amazing. That's where everything starts. So go get signed up.
Well, Celeste, you know how it is when you're trading. I mean, like, listen, we all have a really cool style. I mean, like, listen, some people like vanilla, some people like chocolate, some people like the different flavors of ice cream. But at the end of the day, we like ice cream. So that's the stock market, right? Eventually, you start with vanilla and chocolate, and eventually you'll explore other ones. Trading's the same thing, but it all starts from here. Once you learn how to follow those orders, and you see where they are, and you have a style that's working for you, it's only going to help you. It's not going to hurt you, So and by the way, it works for ETFs, it works for swing trading, it works for cryptocurrency.
Very exciting.
Futures,
very exciting.
Works for all of them.
And Fausto, if somebody's just starting, they're totally new, this will help them. I mean, you got all the beginners information for them, and that you'll get them going. Yeah,
Roger, that's a great question, and I get that all the time. And the reason why trading is such a very big failure rate, unfortunately, everyone trades a little over their head because they make things more complicated than what it is. You know what I mean? So a lot of this is beginner. I mean, just simple support resistance levels. It's just buyers and sellers. I think if you understood what I talked about, I think you'll get it, being in the room. You just need to see it live. And then you'll understand why someone will implement, let me look at this indicator. Maybe I want to do like this. I want to move that into there. And that's how they'll get, now you'll know why we have the style that we have. But yes, it is for beginners. And to ask one other person here how much money you need to do this, listen, all you need is, name your own price. You don't need, it doesn't matter how big your brokerage account is or whatever. I mean, don't let things discourage you in the beginning. Believe me, you'll find it. If you love this, okay, you'll figure it out on your end. But before you even get there, you have to start, by seeing the basics of trading and see if it's for you, because it is a very big failure rate. And I tell everybody this, and you guys know me for a long time. I actually spend more time, I say about 80% of my education is not teaching people how to make money, it's teaching people how to stop losing it. That's what really puts people in trouble. It's the losers that put people out of business. The winners don't. So you got to focus on that.
Yeah, I just think it's just
good info.
Yeah, great. All around comprehensive way to look at the market. And you're right. And people were typing that into Ray was posting there that the orders are like the best indicator, and that intraday, I just can't stress enough how important that is to understand that movement the way Fausto is showing you. It's just unmatched to anything else that you can get out there on the internet. I mean, yeah, you can learn how to, use some different indicators that we all know about, but this is a specific way to look at the market. And I love it. So thanks for sharing all that, Fausto.
Thanks, Fausto. Real good info. I think I'm going to take one of your day trading courses.
Yeah, you're more than welcome. Listen, you know what? I think you have the Thinkorswim platform. Put it on there. Watch the little simple. You know what it is, Roger? You'll catch on. A lot of you that have trained for a while, you'll pick this up within 5 seconds, and then all of a sudden you start exploring it. It's not an indicator. It's a software. This is basically how the exchange trades. So, regardless of, like, if you're looking at a stock, like anything you're looking at, you tell me any stock you want. You go in there, you're like, okay, let me go see what's happening with this ETF with the banking sector you looked at. Boom, you look it up and you're like, wow, that really, not only was I was right, now I'm really right, because there's a crap load of sellers out there still going to get out too. So it just helps. It would be, well, the reason you kind of hit the nail on the head. The reason I would be using it for is for entry and exit confirmations, which would be really good. Like, do I want to get out now, or do I want to wait another 5-10 minutes and see how it's going? Or am I on the side of the buyers or the sellers? So it's a great little tool to kind of give you that little extra edge if you're already there sitting and watching
everything.
It's
So it's great. I'm excited about this. I'm going to enjoy this over the weekend.
Yeah,
Yeah.
it's a no-brainer just to go ahead and scan that, because Fausto's saying, hey, name your price. So you can go in there and get that. As long as it's not zero, go in there, get that, take advantage of this opportunity where you can see exactly this master trader looking at these orders and how he's using that to make money, not only save money and protect his capital, but to make money and make a good amount.
And you get to talk to me afterwards too. So when everyone's all done and you after a couple of days have been out there and you really, because listen, I know a lot of people feel a little uncomfortable to kind of share their thoughts in the chat, and you want people to look at it. You want to have that private consultation with your doctor. Well, listen, as a trader, same thing. I'll be the first person to tell you if this is for you or not. And you know what? You're going to kind of figure it out on your own when you're in there. So you'll see the style like, oh, it's moving too fast, or maybe it's not my style. But until you speak to somebody, I mean, that's really what it comes out. Because I'd rather be honest with you than and let you know than actually going out there and do something and then you end up blowing your account up. And listen, we all know some people really don't qualify to trade, and you'd rather have someone that's experienced that would tell you, listen, you would never want to hire somebody knowing that they're not qualified for the job. Not only you're paying him for it, but he'll probably end up hurting you or hurting someone else. So, and you can get very hurt in this. That's what you got to watch out for. But the real reason why a lot of people do it is they want to try it. And then let me see if I like it. And then if I like it, then I'll learn how to do it. We probably hear that all the time. And that's not what you want to do.
Yeah, well said. Well said. It's priceless to get in there and get involved with Fausto. So thank you, Fausto, for bringing this to us. Everybody, just get your phone out, scan that, or just go click that there in the chat. And it was great being here with everybody. We're going to run over. So Scott and I are going to run over there to Ask the Pros Premium. There's still time for you to get involved in that. Adam can drop that link there as well. Thank you, Fausto. Thank you, Roger. Thank you, Scott. We'll see y'all over there and Ask the Pros. Have a great weekend.
Bye, Celeste. Bye,
Thanks for
Fausto.
having me, guys. Enjoy your
See you
weekend.
guys later. Bye.
Thanks all.